The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started.
Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be reviewing the section from the Best Trade Setups playbook called the 3-session setups. 3-session setups on page 37 in the playbook. These coincide with 3-day setups also. We can get a 3-session, 3-day setup for an explosive, longer time frame parabolic opportunity. But today we'll be talking about front side, back side opportunities, how these can set up, how they can present in different sessions, and what may be the trigger factors for traders to identify those opportunities on the front side of a week and the back side of a week. Similar to 3-day setups, there may be only an opportunity on the day within a trading session for a scalpable 3-session setup. So on the front side of a move, we can get the escalator side. We can have parabolic opportunities on the escalator side, depending on the instrument that you're trading. We'll have had 3 levels of rise for a currency. For instance, we can get a 50 pip box, a 75 pip box, day 1, day 2. For a reversal trade, that can be 25 to 50 pips. And the same goes on gold indexes, oil currencies. Obviously, the more volatile instruments are going to potentially present us with a larger trade opportunity, but for simplicity's sake, we'll be reviewing the most recent opportunities to show, again, the frequency and the process of just identifying the best instruments or candidates in the session that you may be trading, reinforcing a simple understanding that all the setups I'm looking for will culminate in one of 2 types of trade setup opportunities, either a pump. It can be a 3-session pump, session 1, session 2, a coil, session 3 reversal. We can get day 1, day 2, day 3 reversal, and the same goes for the dump and pump. A session 1, session 2, session 3 reversal, a day 1, day 2, day 3 reversal. 3-session setups typically are pump and dump or dump and pump scenarios. Pump, consolidation, dump, or dump, consolidation, pump. I repeat this in every video. The weekly template. Monday, Tuesday, Wednesday is the front side of the week. Wednesday, Thursday, Friday is the back side of the week. Monday is the opening range. That establishes the initial high-low heading into a new week. We may have breakout traders triggered on that day in our new timing cycle, our new week. Typically, day 2 will expand the range. We can have a breakout day. We can have a breakout day on Monday, a breakout day on Tuesday. This can precipitate the potential of a trade, a 3-session setup setting up. Wednesday, day 3 can blow off in the direction of the initial breakout, or in some cases will be the reversal day. We may get a larger 3-day template signal day. Signal days, as we've reviewed, and each one of these review packets is in the course back office in each one of these sections. Day 3 longs, day 3 shorts. Reversals are trend trades. First red day, page 58 in the playbook. First green day, page 64, the inside day, false break and trend trades for low-hanging fruit. And of course, the different trade setups that can present with that. The basic model for trade entry criteria, page 29. But most importantly, understanding that a 3-session setup can culminate over 3 days. So we can get a third day on a 3-day setup with the 3rd session on closing range on Friday. U.S. session closing out the week. We can get a 3-session setup in Asia on an Asian cross pair. We can get a session setup on a euro-pound cross pair in the London session, or we can get any one of those in the U.S. window as we can with the other sessions. But again, tracking the instruments, having triggers and signal days that can give us an eye into which pairs are potentially setting up as best trade candidates for a parabolic trade setup. Reviewing that yesterday's high of day, yesterday's low of day, the closing price are all the levels that every single trader has when we come to the screen each day. These are the levels that I look for my trades to come off of or to potentially be trapping volume for a parabolic reversal or trend trade. But every single trader has these levels. When the week starts, Friday's closing price is where the auction process begins from in the new week. When I have markets breaking higher, we have an opening range or a breakout on Monday, we can have a market that closes in breakout as a potential signal that a market is now moving either 3 levels or it's breaking out to continue moving on the pump side or the dump side. And that alerts me to potential opportunities that can show up in my session. Now, I mainly trade the US markets, but on the backside of a week, I am constantly looking for one Asian cross pair, which we'll review today, to give me either a first red day or first green day opportunity over the longer time frame. Simple process each day is number one, do I have any pairs that have broken out? So day 1, day 2, day 3, are we front side or back side? So when we come to the midpoint range of the week, we may be looking for a 3-day, 3-session all-in opportunity, but on the front side of a move, we may just be looking at session scalps, the escalator up or the escalator down for the elevator ride up in the back side of the week. Have they already moved earlier in the day? So for example, I could come to the screen, I have a market that's potentially closed in breakout. I come to the next day in the US session, it's already moved in London. So now I have the possibility of low-hanging fruit, page 96 in the playbook, and keeping things simple, understanding that this may be a session scalp until we get to a 3-day, 3-session opportunity for first red day, first green day, for a larger scalable, larger time frame parabolic opportunity. And this PDF and video, just to remind traders, will be placed back inside of the course back office under the 3-session trade, high of day, low of day scalping, and 3-session setup opportunity window. Now, each week, Forex Factory is the red news site that I use, and it doesn't really matter what you use as long as they have all the economic release for the week, including crude oils inventory, which is found under the energy tab. But we can take a look and see which major red news will be during the Asian, London, or New York sessions, so that if we have an opportunity, we want to make sure that we are not trading in front of a major red news release. We can see that 2 a.m. on Tuesday, we had claimant count change on the British cross pairs. And when we look at Monday, the British pound, it closed outside of Friday's range. It closed out of balance. It's a breakout. It closed in breakout. So coming back to Dalton and market profile, remembering when a market opens outside of a range or closes outside of a range of the previous day's range and is accepted, conditions have changed and the market is out of balance. Now, at this point, it creates an opportunity that the market could continue to auction in the direction of the breakout, or it may fail at some point and give us an opportunity for a parabolic trade setup in one of the 3 sessions. British cross pairs can come into the play as well. We want to check out which instrument is actually the best setup on the day itself. We know that there's major red news at 2 a.m. the following day. We're looking for the potential of a market triggering new breakouts and failing for a reversal opportunity. Now, the pound Australian also closed out of balance, as did other pairs, but it also proceeded to auction in the direction of that original breakout the following day. A 3-session setup is exactly that. We're looking for an opportunity where the market uses 3 sessions to create either trap volume up high or trap volume down low for a parabolic reversal if indeed it sets up in our timing window. US, Asia, London may create that opportunity. Now remember, when we have breakout traders triggered into the market, we have a gap now from where that breakout's occurred. And in Asia, they continue to auction higher, triggering the new high of day. So understanding the ideal candidate will initiate other time frame traders into the markets. When we come into our London window, we have major red news at 2 a.m. Major red news at 2 a.m. Our spike candle, we're above the high of day level. We've traded back into the high made in the Asian window. And now we have an engulfment, a pattern within a pattern, as Peter Brandt would call it, at our London open window. Our engulfment candle back inside of our universal entry criteria, EMA, for the parabolic reversal on day 2. So if we back this up and review keeping things simple. We have a market that is broken out on day one. That's a signal. Day one on the front side, triggering new breakout traders in our Asian window before consolidating and engulfing for the parabolic reversal trade. Breakout, consolidation, reversal. Now, in the beginning, I would focus on mastering taking 50 pips out of the market. On a larger 3-day setup, obviously the range can be bigger, but for the purposes of execution on these parabolic session trades, depending on the instruments, the majority of the more volatile ones will give at least 50 pips, but definitely locking in a minimum of 25. And if it's a more volatile instrument, setting a profit target for 50 pips, while at the same time managing our risk on that 1 bar entry. Now we have a 1 bar stop. This market should be going quickly and parabolic into profits almost immediately. A preset profit target, as I mentioned, starting with 50 pips. If it's a less volatile instrument, having 25 to 40, depending on the pair. Most of the cross rate pound pairs are going to give 50 pips in this type of opportunity. We've moved up more than 50 on the breakout. We've had the consolidation. We've triggered new longs into the market. We've waited till after major red news. Once it clears that low of day level, I would be at break even. You'll notice that returns back to Friday's closing price where the auction process begins. We started the day in breakout, but this market has closed pretty much at the same level that we opened at, but we've closed inside of Monday's range as opposed to closing in breakout on Monday. We're now back inside of our opening range. Day 2, parabolic reversal trade on the pound Australian. On the euro yen, on Monday's opening range, we also had a breakout. Tuesday, day 2, also closed in breakout. And you'll notice, again, the escalator type of behavior. Escalator up. Potentially, we may be seeing the elevator building into this market as we go up higher each day. But Tuesday closes in breakout, and that's potentially a signal day. Day 1, day 2, day 3. On day 3, I look for 2 types of trade opportunities: parabolic trend trades or parabolic reversal trades. Now, I've mentioned also to traders that on the front side of the move, major red news can act as part of the game. This is PPI on the front side. PPI, U.S. session, 8:30, major red news. We already have a market in breakout. It continues to lift higher. You've heard me use the phrase, lift the offers, pull the bids. Well, this lift candle forces everybody who's trading after that, whether they're buying or selling, further and further away from where our weeks has started at. Remember, Friday's closing price is where the auction process starts from at the beginning of the week. Everything starts from that price level, that number that every single trader has when the week begins. Now, we've triggered new longs into the market in our Asian window. We've broke down and made a lower low. Lower low is the setup for the pump and dump. We have our consolidation, our breakout, our consolidation, our lower low on the inside as we head into our London session open. Again, it's a max stop. In this particular case, from the coil to the high would be 15 pips. And I've mentioned this before that most currency pairs, the stop can be 15, 20 pips max. Obviously, indexes, oil and gold can tend to be maybe up to 25. But in a parabolic move, these should be moving quickly and zero stress, zero heat in the trade. Once it clears this level, this trade can be moved to break even. At this point, in the simple model, we won't be talking about scaling in, but just the simple model of mastering the setups. Preset prof target level. As that market collapses through, it takes us out of the market, locking the profits in. Just repeating the same simple process. Breakout, consolidation, triggering new longs into the market. Lower low, pump and dump, our stop loss, our profit target, our trade management, pump and dump template on the euro yen on Wednesday, day 3, the midpoint range of the week. Same trade setup that we had on the pound Australian on Tuesday, day 2. A pump and dump, breakout market, consolidation, reversal trade in the London session. Simple model, pump and dump, breakout market, triggers new breakout traders into the market. Session 1, session 2, consolidation, parabolic, session 3. Now at the close of Wednesday, we've closed back inside of Tuesday's range and also inside of Monday's opening range. But we've also closed now as a first red day. First red day, page 58 in the playbook. First red day. Now, first red day is a longer time frame, 3-day setup opportunity. If we put our universal entry criteria on this chart prior to the start of the day, we open up inside of our universal EMA after first red day and back inside of the opening range high of Monday starting our week. Now, our first red day opportunity gave traders a couple of opportunities to add into positions on this market. We have a market that's coiled sideways into our EMA just prior to our Asian session window starting. So we have not only a starter position that can go into the market pre-market or into that window as we coil. So there's opportunity number 1 into the coil. Opportunity number 2. This trade was taken by several traders actually yesterday morning in Asia evening for North American time. And also as that market's collapsing to be scaling into this, targeting the low of the week where the market began on Monday. A fantastic first red day opportunity. And when that market has cleared that level, taking us out, taking profits, if traders were to leave a trailer, we have 1 break, 2 breaks, and a third push into that low of week level. That is a dead set giveaway to be locking in the profits if you've trailed that market down, closing that trade off on the 3 push pattern into the low of the week. Max stop is the high of our first initial position. As that market gives us the opportunity to add additional positions in, our max stop is lowered on each additional entry. Once it clears that swing low, we are at break even on all positions. Our take profit levels are preset, and that market will take us out completely. If we leave a trailer on that third push, we want to be lowering our exit on that last position as this market breaks down on that last push, because it's either going to collapse and continue through, or it's going to reverse and take that last position out as close to our take profit level as possible. Day 3, Wednesday, a first red day opportunity. So we've had a 3-session parabolic reversal on day 2, a 3-session parabolic reversal on Wednesday, day 3, and a first red day signal for Thursday's Asian session for a parabolic collapse from high of session, high of day to low of week on the same pair, the euro yen. There were other instruments that gave similar trades, obviously the pound yen, the yen, but for simplicity's sake, these were trades that I did execute in the in the Asian window. And again, the process, the instrument is irrelevant. The same setups will occur over and over and over again in these templates. After our first red day collapse on Thursday's Asian session, we have a market that's making lower highs before making a higher high after clearing out the low of week in our London session window. The Europe Open makes a higher high before dumping down into the coil in our London Open for the higher high pullback and continuation reversal back up inside of our low of day level. Now, the best part about the U.S. window was that we had 8:30 a.m. unemployment major red news release. We've already pulled back inside the low of day level and coiled sideways before pushing higher, again, higher highs prior to our major red news right at the beginning of our U.S. 12 candle window. 12 candle meaning 12 15-minute bars completes our 3-hour window in the U.S. We have an engulfment pin hammer 5 minutes after the major red news release. Once we're in the trade, our stop loss is placed, again, a max stop. Once this market goes parabolic, immediately I would be going to break even on this trade. We have a preset 50 pip profit target. This market moves up through the high of the current day through closing price and back up through the lower peak formation highs from the U.S. window on Wednesday's first red day collapse, targeting our 50 pip level. And if we pull that back, you'll notice that coincides with the last swing high from our U.S. session window. Again, a breakout market, consolidation, reversal, parabolic trade back through the high of the day. Session 1, Session 2, Session 3. On Thursday, day 2 on the backside of the week. So we've had parabolic opportunities on Tuesday, Wednesday, a first red day trade, Thursday's Asian session, evening time North America, and a U.S. session parabolic reversal trade dump and pump template. Remember the two types of templates, pump and dump or dump and pump template. Set and forget. You can set alerts if it makes you happy up here to make sure that you extract the maximum amount out of this trade. But it hit our profit target. Zero stress, zero emotion after major red news, just following the simple process, breakout, consolidation, parabolic coil for either a reversal or trend trade on Thursday, day 2. Now, obviously, there were other instruments that gave other trade opportunities. The purposes of the video today is to demonstrate the frequency and the simplicity of the model. If you keep it simple, sit back, let the market set up. There were other sister instruments. The pound yen, the yen obviously gave similar trades. There were other trades and other instruments in their sessions. But again, day 1, day 2, day 3, keeping things simple, keeping the model very simple, focusing on the highest probability 3-session setups, rinse and repeat, scale them up in size. And when we get a 3-day setup out of that template, those are driven by other time frame traders. Larger time frames are driving those moves over the course of the 3 days. They're scalable in size. They're fast to complete their move. They move quite aggressively. Keep it simple, traders. This PDF will be in the back office with this video. Focus on the simple daily process of identifying the highest probability candidates and then the ones that set up the best in the session that you're trading on the day. Keep it simple, and may the markets go with you.